Alright, before I start the video, follow my TikTok. I post on this shit on a day-to-day basis. As you can see, let me reload the page. Another TikTok out right now. Boom. I do this shit. But as you can see, 9 a.m. today, we had consumer sentiment. I'm never this late to make a trade recap, but honestly, bro, like, I literally took the second trade that I took for the day, and I took the trade, I closed my computer, went to the shower, and went on with my day. And I just got back home. So, let's make the trade recap, right? Boom. As market opened, we took out the Asia high. I was really waiting for a reaction to go downwards to prove a bearish bias for the day, because the way that I trade, if I see a session high or session low being broken, and I see a reaction off of sweeping that high, or sweeping that low, I basically have my bias for the day. Because in my opinion, how price action works is, right, let's say suppose this is the high right here, this is the New York high, and then price comes up, takes it out, and then you see a drop off of taking off a session liquidity. That, in my personal experience, has showed me that is where price is going to go for that day. That's what I take the trade off of, or that's what I find my bias off of. And then I find a continuation confluence, and then I find sometimes even a further continuation confluence, such as a fair value gap, or invalidating a fair value gap, or equilibrium, order block, SMT, as I used in my second trade today. I find these sort of confluences to help me time my entry and place a good stop loss. But usually I'm always targeting a session high or a session low, and I'm always waiting for a session high or session low to get swept out. I don't think I've ever explained that, so good to explain that for y'all now. Right, boom. So market opened right here, we swept out the Asia high, formed the London high, and we got reaction off of it, right, which is really what I was liking. I was liking that for the day. I'm going to be very honest on this 1 to 0.68 trade right here. I have no idea what I took the trade off of, because I took it off in the morning. But I'm assuming what happened. Okay, this was something that I wanted to see get invalidated. It got invalidated right on this candle, which was useless to me now. And then I think I basically sort of took this off of price filling in this 1 minute bearish fair value gap, because how the 9 a.m. candle works on news is sometimes it just completely shoots up, invalidates it for a second, but it closes like in the fair value gap or below the fair value gap, which still means that there was a reaction off the fair value gap. But since news is so boosted, sometimes it just goes through the fair value gap. And I'm speaking off of personal experience here. Maybe in your opinion it doesn't, but in my opinion, from what I've seen, is right here we had the 9 a.m. consumer sentiment and inflation expectations, which boosted up, filled in this fair value gap, and we got a reaction off of it. I sort of bottom ticked on accident because I just wanted to get in, but realistically, this would have been the trade that I took. Low drawdown, really, but as you could see, within like 2 minutes, we hit the trade. Nothing really serious. And then also, once I took that trade, I noticed NASDAQ from 848 to 851, it went from a higher high to a lower high. So the way that the SMT divergence works, and this is the way that I use it, is you have a lagging index and you have an index that's in the right track, is the easiest way to say it. There's NQ, there's ES. One index is lagging and one index is in the right track. What do I mean by that? As you could see, NQ already took out the London low, and you could see from this higher high to lower high, we're already in a lower trend. But if you go to ES at the same exact time, okay, this was the trade for the day. Same exact time, we're going from a lower high to a higher high. Price made a dead even with London high. So in that way, this is the lagging index, since it's not fully gone in the bearish trend, if that makes sense. So I saw that price hadn't even took out the London low. I'm like, boom, I'm gonna target that on ES too. If NQ took out the took out the London low, and NQ is already in a bearish bias, and it's already took out the London low, and ES is in a higher bias right now, and it's not taking out the London low, then I think to myself, oh, boom, it's gonna take out the London low, right? That's extra confluence on top of the factor that we just made a dead even with London high. So I was thinking that, boom, we come down, we fill in this this 1 minute bearish for value gap, and we get a reaction out of it right here. Boom, I enter, stops at the fair value gap, 1 to 1.75. I really could have ran it down to the 1 hour bullish for value gap for 1 to 2.75, but I wasn't, I just wasn't feeling it, because it had to be a one take profit trade, because I was getting off the charts at that moment. NQ, I was honestly considering running it down to this 15-minute low, but I was wondering if ES takes out the London low and they get a reaction out of it, then I would probably get stopped out. So it just didn't work out. I took these 2 trades. That's really it for the day. Two good trades. This one was 0 drawdown. This one a little bit of drawdown, but I wasn't really scared. That's all that I got for y'all boys. If we go over news for the next week. So Monday we have a no news Monday. Tuesday, with Powell speaking, there's a good chance that I don't trade. Wednesday we just have home sales I'm trading. Thursday we have unemployment claims. We have PMI and new home sales, so I'll be careful. Friday we're good as well. That's really it. I'm gonna catch y'all boys on Monday. Follow the TikTok, bro. I'll be on that shit 24/7. Y'all have a good one.